Okay, so last week we have a non-farm payroll, and just before that, I would like to share some trades that we spot from the last week. First of all, is a gold short trade, which the first trade we take is actually from this 618. You can see here this is a downtrend, the pullback, and in the 618 level we found this inside bar breakdown. That's the first trade we took, okay, and then we found this very strong bearish candle, and then formed a consolidation area and a structural breakdown, and we short again. And aim. This is the first target. This is the second target, right? So both of the target hits, and we know that now we have completed this ABCD patterns. So now we can combine these two together as one wave, and we are waiting to short the 618 again. That's why we took another sell from 1519, okay? And then non-farm payroll day is actually the price give us another small 618 to enjoy the second fall, which is here. Can you see that? So from this down wave, and the non-farm payroll just hit the 618 to 15110, and then it dropped down here. And now, guys, look how similar this place is. After complete this ABCD pattern, what happened again? Yes, record it. What happened again? Can we use the same strategy again? Like we combine this ABCD pattern into one wave and wait for the 618 to short. You can see here, another small ABCD complete, price shoots up. So now it's time to use the 618. Okay, and you can see here, price just touched. So what we can do is we can short go right now. Stop loss above 1520, okay, above this pin or above the non-farm payrolls pin, because the second wave is going to go into test 1487 and even 1465. So, and in the daily chart, you can see the gold is still in the high location, but the price failed to create new high. Now it forms a lower highs, okay, lower highs and lower lows. So we can assume the gold is going to moving in this downtrend channel, and that's why we want to take every bounce to short to enjoy the next fall. All right. So now my question is, how many of you are going to take this trade? Are you afraid about this rally? Are you scared about the rally? Oh, the rally is too strong. Why we cannot short? Or you just believe these patterns, right? ABCD move, 618 pullback, short it, and aim to this low. Of course, we're going to have a very strict stop loss above this pin, okay? About $7, yeah, at most. Now raise your hand if you want to short this trade, because this is what we spot today, live, yeah. Okay, good. So you make sure that you understand the meaning of this trade, okay? And then you go to short, because you're not going to hold this trade if you don't understand the trading plan. Our plan is the double top trade. This is a 2618 trade, right? It's just this is a small 2618 trade that coincide with the big 2618, right? So maybe we're going to get our TP very fast to 1494 this place, because we have a strong rally from here. The origin, the structure is here, so I think that will be our first target, right? Okay, so any questions for gold? If no, let's continue. All right, let's go to the euro. Okay, the euro have a rally in the last week, and now the euro still be rejected from this area, and 4 pins occurred already. So what we can do is we can make this pin bars as our rejection area to short the euro as well. And all you need to do is to put your stop loss above 1.10. Yeah, about 1.1005. I think that would be enough, because if this place is taken up, I think the euro will just reverse. All right. However, if cannot, after so many rejections, all those sellers are accumulating their orders here. So we're going to take a shot from here and see whether the euro can give us another downfall. Okay, so euro, we are bearish. Let's go for sterling. Okay, sterling has negative returns because sterling just break this support from here. You can see this candle is very, very important, because after this candle, a strong move occurred, right? And now look left. What happened is the sterling has already braked. See, it has break the lowest point of this big candle. Okay, pin bar, pin bar, pin bar, and a small supporting line was broken today and formed by an inside bar breakout. So now the sterling is very hard to bounce, and our strategy is to wait for the pullback to short again. Okay, but just remember, we have to short the first touch. Okay, the first touch means we short the first pullback, but we don't short the second or third. Okay, just to short the first one and see whether it can give us another like 100 pips. Okay, and then if we put this Fibonacci level of the sterling, it just hit the 618, but I do not want you guys to participate in this 618 because it's daily 618. It's too big, 1.2196. The lowest point is 1.1960. It's about 200 pips. So yeah, don't buy the sterling and focus on shorting the selling the pullback, because a lot of our buyers are trapped above 1.22. And if there's a pullback, we're going to make use of them and to have another short. Hopefully we can get this area, to this place, okay? Because this place has some support from here. Okay, so sterling this week, we are bearish. Are we clear? Yeah. So yeah, if there's a small, like let's say let's go to the 1 hour chart. You can see, yeah, very, very sharp fall. Okay, but do not chase the price. Wait for the pullback to 1.2267 and short. Okay. All right, move on to Aussie. Okay, Aussie same. Yeah, similar to the euro. Okay, still rejecting from this area of 0.6770, and price come down, have a pullback, and now it's going down again. So we are going to wait the Aussie to break 0.6728, wait for this place to be broken and to short the pullback. All right. Yeah, that's very important, because we won't know that this neckline will be broken or not. Hello? Speaking. I just received a spamming calls. Never mind. Okay, so Aussie just wait for 0.6730 to be broken and pull back and sell. Okay. Although it looks bearish now, but we don't want to sell right now because you don't know that this place is going to hold on earth. Okay, the best place is still to sell the breakout and the pullback. Okay, so Aussie tentatively we're going to break down. Okay, so after absorbing the euro, the the sterling and the Aussie, what's the feeling of the DXY, guys? You see the euro, right, is rejecting from 1.11. The sterling is rejecting from 1.10, and now it's going down very quickly. The Aussie is also coming down. Yeah, DXY. Oh, DXY looks bearish. No, I don't think so. DXY is strong. See, in 1 hour chart, the DXY had very strong rally. Okay, and in daily chart, you can consider this as a breakout. This is a breakout, right? And after pullback, the DXY finds support from the previous structure, and now the DXY may have another rally to retest a new high, or at least 618 area. And don't forget the daily chart today, the DXY break the previous high, and this is inside bar breaks up, right? So DXY is bullish. This is just keep in mind, all right? And let's go to the weekly chart. Still is a very squeezing uptrend. However, it's still uptrend. So I want you guys to put this trend line as your reference for the DXY. As long as it is still in this above this trend line, it will still goes up. Okay, and let's put the Fibonacci level here. You can see now 618 was broken, and I think the price is going to reach 149, which is 786 or 0.886 level. So DXY in weekly is bullish. It's bullish, right? For the Kiwi dollar, it's very weak. Okay, the price testing the previous low, almost broken, but not yet. So I think the only pairs that we could try to buy will be the Kiwi. Okay, and the stop loss is very easy to be set, which is 0.62 even handle. So we can use this trend line as a reference because it has broken this downtrend line. Price breaking out, coming back. All right, I think what you can do is wait for the 618 to buy, because now it's putting a double top, looks likely. Right, it's here. This looks like the price is coming down, and we use the 618 to measure where are we going to buy. Oh yeah, 0.6254. So maybe I think, guys, you can put a limit buy here. Okay, for the Kiwi, you can put a buy limit at 0.6254 because that will be the very, very nice entry of this trading plan. Okay, you buy from 0.6254, your stop loss below 0.6200, about 54 pips loss, but in exchange of about 200 pips gain. Yeah, at least 0.6450 or 0.65. Okay, so that's what we can do for the Kiwi. Okay, let's move on to dollar yen. Okay, dollar yen. How to set stop loss on the kind of trade? Yeah, you can use this. What we call is a trading. When you go to the MT4, you choose the limit order, and under the order panel, you can set your entry, stop loss, and TP together. Okay, that we call this is actually a trading, a bracket trade. Okay, a bracket trade. Yeah, you can set when you do the, yeah, it's available for you to sell or for you to set. You first of all, you choose the order type to limit order, and then you can key in the stop loss and the entry and the profit taking level at the same time. You can just put that 0.62, 61.99 maybe. All right. Okay, let's move on to dollar yen. The dollar yen looks like makes a double top. Okay, price pulling back, and we made a short trade in the last week that we actually capture a quick 50 pips gain, and then the dollar yen moves up to here 107.43. I think now what we can do is to wait for the price to come here 107.60. okay, here, because this will be the structure that I'm going to watch for our sell. Okay, so this is for the dollar yen. But whether you want to buy, I think, yeah, I won't suggest to buy the dollar yen because it is not in a very low place. Or maybe if you really want to buy the dollar yen, I think you better wait for the 618, the big 618, which will be 105.98, which will be here. Okay, here is the buy area of the dollar yen, but 107.62 will be the selling zone. So every time we're going to spot this buying zone and a selling zone and wait for the price to come to this zone and for us to attack. Okay, so that's the very key things of trading. We don't want to take the trade in the middle place because you don't know where it goes up or goes down. But if you wait for the price to come to this important area, okay, the chances that you're going to have a winning trade will increase a lot. Do you understand? Okay, so do not trade just based on what it looks like. Yeah, it's coming down, so let's go short. No, that's wrong, because after you see the fall down, but the price may reverse any time, and the price already drops a lot. So if you choose to short, choose to chase the price, that's not a good deal. But if you wait for the good structure to sell or to buy, a lot of time you'll be winning. Okay. All right, let's move on to dollar Canadian. Okay, dollar Canadian. We took a short in the last webinar. That was a 618, if you remember. I said we can short from 1.3287, and that actually gives us about 80 pips. And then it comes to the opposite 618, which is here. Almost hit the 1.32. This is the supporting 618 level, and it has I think the fundamentals have some news for the dollar Canadian to comes up, and now it looks like the dollar Canadian has flag patterns. Okay, so I think now the dollar Canadian is going to rally. It's going to rally. What you can do is you can choose to buy the dollar Canadian now because it has already broken the flag, and your stop loss will be below this this candle 1.3297 and 94, and your target will be about 1.3360 or even higher, maybe here. Okay, watch 1.34 because 1.34 is the last the place that last time the dollar Canadian has a region of the 4. So I think what we can catch the trade is to buy the dollar Canadian dollar CAD of these flag patterns and aim to 1.34. Right. So that's a chart for the Canada. All right. Okay. Move on to the oil. Okay, the oil has a very bearish trend after this spiking high, and our buy from here is actually stopped out from this very strong bullish candle. I think we stopped out here 57, and now the price continue coming down and retesting the previous low. So what we can do is we have to understand the oil has already broken this downtrend channel. So this is the first criteria that we're going to have a buy. Second of all, we have already spot that it actually come down to the 618 level. The third supporting reason is today the oil just to have this small ABCD patterns. Okay, so this ABCD patterns is telling us that the shorting force is getting terminated from this area. Okay, so the price moving in an ABCD pattern coming to the 618 level, and now it's showing a very positive reactions. So that's why we want to buy the oil. Okay, you can buy the oil right now because it's still in the buying zone, right? Your stop loss should be below this ping, about a 51.47. Okay, that's all you need to do. And your target is very, very simple. After ABCD patterns, we assume that the price will keep going up with this previous uptrend move as a dominant move. So the major ABCD is here, and that's our target, about a 54.90. Okay, so we have a very nice trading plan for the oil this week is to buy the oil from the 52.17 zone here and aim 55. Okay, so this is will be our almost 250 pips gain for you guys to earn. Okay, so raise your hand if you are okay with this oil trading plan. Do you understand why? Because I have already put 3 reasons. Okay, first of all, downtrend channel. Second of all, 618. Third reason, that is the ABCDs. Okay, you see now is coming up very quickly. Okay, I think it's still okay for us to buy. And if you want to precisely know where you want to enter, let's go to a lower time frame in 30 minutes. Okay, here. So in 30 minutes, we are now in big picture, because one of the students asked me to explain how do we actually use multiple time frame, okay, for trading success. For example, here now in daily chart, we understand that the oil is in a supporting zone, right? This is the background, the big picture. Okay, daily chart, oil. We want to buy the oil here, and our long-term target is easily to be set from this swing high to swing low, this Fibonacci level. I think the oil is very okay to get back to the 618 level, which is 58.61. Okay, question 1 is you can directly go for this trade that you're going to risk. Let's say you're going to risk about 250 pips. See, if you buy now, buy from 52.35 and put your stop loss below 51, okay, you're going to risk 230 pips. So, and your target will be about 620 pips. So this is a daily trading plan. Okay, so I need you to give me a confirmation that whether you understand this daily trading plan. Anyone? Give me 5 if you understand this is a daily trading plan. Okay, good. So from this daily trading plan, guys, how you can see here the daily trading plan is, let's put a comparison. Okay, daily trading plan, our stop loss is about 220 pips, our gain is about 620 pips. Okay, so how to improve our risk and reward ratio? How to? Okay, the answer is go to lower time frame. Okay, because you have to understand that the price will not shoot up just in one big green candle. It has to form some patterns in a lower time frame. Okay, so bear this in mind. Okay, let's go to the 1 hour chart, and we found that, yeah, just now we found the ABCD patterns, right? This is ABCD patterns for us to buy. And if you believe this ABCD patterns now, can we, in 1 hour chart, okay, our entry is the same, but the stop loss, we do not need to put so far to 51. We can put the stop loss just below this pin, the pin bar here, which will be 55.78. Okay, so the distance is about, yeah, just now it's 52.30. Okay, then the stop loss is about only 60 pips. And my second question, can we use the daily pictures target TP in this 1 hour chart trade? What do you think? For those people who are taking the daily trade, right, their gain is about 620 pips. Their target is about here, 58, remember, here. But do you think that it's possible for us to set our 1 hour trade, but our target will be the same as a daily trade? Do you think that's possible? Yes or no? If we do believe the oil will rally from here, without taking our stop loss, definitely I can hold to this daily 618. Why not? For people who are taking the day trade, right? If these big chart players can hit their TP, do you think our 1 hour chart trade will also hit TP? Are they have the same directions? Do we? Yes, we do, right? Both for this 1 hour trade and this daily trade. Okay, let's the direction is up. Okay, 1 hour chart that you are buying, you're not sell, you're buying, right? Okay, 1 hour chart is up. For daily chart is also up, it's also a buy. But with this multiple time frame, because we know that it's after it complete the ABCD patterns, and now is best time to buy, and we can set the stop loss just below this pin here. Okay, so we can use this daily pictures TP as to set our the furthest TP for this 1 hour chart. But along the journey, actually you can, what you can do you think the price will just move like this? How many of you think the price will just, oh, just one way, one rocket, boom, hits 58? Do you think? No, that's not going to happen, right? So what can happen is, okay, you have to imagine what will be the next phase of this uptrend. For example, I think the oil has to break this structure first, the 53.35, this place, okay, because this is origin of this downtrend, right? So if the oil can go up to this high, it has to break 53.27 first. And after the breakout, you know that the higher high is created that confirm that your direction is correct. So if there's a pullback, can you buy again? Can you? Yes, you can. You can buy it again and see whether it can go up or not, right? If it breaks another high, let's say here, and you know, yeah, you are right again because it creates another high, okay? After it breaks 54, can you buy the pullback again in lower time frame? Can we? If the trend is really up, every time you buy, you are buying the structure, okay? If the price moving this way, guys, can you hold your best entry and take some profit when it hits into a major resistance and trying to add some back or add the half position back when the pullback, okay? Breakout, you take some profit again, coming back, you buy it again, okay? So buy, sell, re-entry, another taking profit, re-entry, taking profit, re-entry, taking, but you always have half position here to enjoy the whole 600 pips. That's how multiple time frame trading looks like. Okay, so instead of you took the daily trade, one time buy, one time sell, now you actually split this whole trade into many small trade. Okay, and every small trade, when it comes to the 2-to-1 reward and risk ratio, you can take some profit and move stop loss to break even to protect the profit, but you do not forget the whole picture. It's still an uptrend going to 58. That's highly possible, right? So hold some position or hold at least half position to enjoy the long run. So you have, for example, I have a one lot here. Let me just explain this very carefully for you. Okay, I have a one lot to buy here. Okay, when it comes to 53.20, I will take profit 0.5. When it pulls back again, I will plus 0.5. Okay, here also minus. Okay, and then this half position, when it makes money, okay, you can do it again. Okay, so every time when it has a new high created, okay, you take half position, and when it comes back, you buy another position. Okay, so this is what looks like. Okay, so by doing this, you are always making money because you took the money from here. You are making money from this. Okay, this is money is yours. This money is yours. This money is yours, right? But don't forget what else you have from this lower time frame ready. That's not enough, right? But you still have, I still have my final 0.5 lot. Always hold. And that is going to be your biggest winner of the whole trade. By doing this, it actually is bigger than you buy one lot and hold here, because you enjoy a lot of small fluctuations. Now, the stop loss for additional trade is based on what you see. So every new trade you took here, okay, for example, if the candle looks like this, okay, a breaking out come here and two candle come down, right? Then your stop loss is just to set at the below the breaking candle's low, okay? Set here. Then for this one, it's going to set to be, you just look which candle is the breaking out the candle and set here, okay? For different trade, you have different stop loss based on what you see. Now I think you know what is the answer. Are you clear? Okay, so I'm not saying that all of your buying is going to all be all right, because sometimes we maybe touch the stop loss, but that's fine. But at least you have a add-on, you have add-on positions for you to have another strike. Now, so the beauty of this is you don't trade only once for the daily chart, and you split into the 1 day trade into a many small time frame trade. Okay, and each, remember, the key thing is for each lower time frame trade, okay, when RR hits 2 to 1, okay, take half profit, okay, and move stop loss to break even. All right, that's very important, because if you never take the profit, you are adding more and more and more, and you are trading, lot size will be bigger and bigger. That is some, and eventually it's going to be out of control. Okay. Okay, let's do another example on stocks. Okay, because I know some of my students likes to trading equities. Okay, so for example, we go to the Apple. Okay, the Apple AAPL. So you can see here the 2019 low is from 144. Okay, here. Okay, let's imagine if you just buy, if you buy 100 shares, okay, and hold until now. So this actually needs some calculations. You buy 100 shares from 141, now it's 225. How much you gain? About $70, right? So $70 times 100 shares, you earn how much? 7K. You earn 7,000 US dollar, right? Okay, good. So this is buy and hold, from buy and hold strategy. Okay, so Jack is going to teach you how to buy and sell smartly. Okay, imagine I have same buy Jack strategy. Okay, you buy 100 shares at the same level. Okay, so from here, what you can see is the price has a very strong rally to here, right? Right, and then the price come down again, and a breakout happens, and it comes down again and reach to here. So what we can do is we can sell 50 here. We can sell 50 here because it already have a many hits into the resistance area. You can buy 50 from here. And then price rally again to the 618 level. See, 618 is coming, right? So you should take another 50 and comes down when you see this structure breakout trade. Okay, you buy 50, and then here you minus 50 again because it hits into the previous neckline, right? This is neckline. Okay, that's why you want to sell here, sell half. And then you're waiting, you see this downtrend starts, the downtrend starts, right? So maybe you have another buy 50 here, but this one is going to be stop out. Why? Because if you buy here, you are based on this structure, okay? And your stop loss will be triggered when the price drops down, right? So this 50 is a loss. You actually have this loss. Right, and then you see, oh, okay, the price is coming down. So will it come to another 618? Yes. So you can buy another 50 at a 618 shares. Okay, at 618 level, you buy another 50 again. All right, and now this time you know that this is a 618 pullback. So very likely the price is going to retest a new high. So let's take another 50 shares as profit, right? Took another shares from here and comes to here, back down to this structure. All right, you're trying to buy another 50, but this is not based on the 618. It's based on structure. Maybe based on this structure, and you hold it until now, and now you sell. You sell another 50. You still have another 50. So how much money do we win if we do this? Okay, so let's just calculate. Okay, you guys just need to calculate for me, right? So this 50 earned 142 to 178. That is 142 to 178 is about $35, right? $35 plus the second 170 to 197. Okay, another 27. Third one 184 to 200. Okay, you just like 15. Okay, 15. 180 to 184 to 215. Yeah, 30. Yeah, 30. 30. And you have a minus because we buy from here and stop out from this breakdown. Maybe you are even gapped out the breakdown, so you lose about $20 on that 50 shares, on these shares, and you buy it again from 170 earn to 215 plus 45, and you earn again from 194 to 226. Okay, it's about 30. Okay, so adding this together, let me just use my calculator. Okay, 35 plus 27 plus 300. Plus 30 minus 20 plus 45 plus 30. Okay, total you earned $147. But remember, how many shares do you earn? How many shares do you take profit? Is 150. 50, right? So the profit, the real profit for you to buy and sell is you have to times 50. Okay? Times 50 shares, which you have this number, 7,350. Okay? This is what you earn, 7K from the 50 shares. But you still have another 50, remember? I still have another, because I took the first 50 and then I have this 50 buying from here, but my second 50 is still here. So my balance 50 earned how much? Earned 145 to 227, right? Okay, earned $70. Okay. my second 50 shares earned, okay, $70 equals to 3,005. So adding these two together, total I earned about 10K. Okay, but if you only buy this one share, 100 shares here, and all the way here, hold to here, you only earn 3K, 7K. Okay, so now you see the difference. Do you see the difference between my strategy with this buy and hold strategy? Okay, because we are traders, we are not only investors. Investor buy and hold, but we taking some profit first. We're adding in the back and taking another profit when it goes to another resistance, taking another profit. Okay, because always we want to just to enjoy the trend, right? We want to buy low and sell high. So it's buy low, sell high, buy low, sell high. So, and you need to really to focus on the trend formations, patterns, okay, the fragments, okay, also the uh, stop loss and entry that you take for every trade. All right. Good. So I think I've explained this how you turn a one big daily trade or weekly trade into many lower time frame trade. Okay. So that will actually give you more money, give you extra return if you can understand what is a trend, understand what is a breakout and pullback. So which one is better? Do you think? The 10K and 7K, right? It's outperforming. Right? Good. So last but not least, let's go to the S&P first. The S&P beautifully have another sell. Yeah. Okay, remember I said we can short the S&P based on this harmonic patterns from here, and it did comes down here. You can see from my trading view. Oops. Why my S&P? Where's my S&P? Where? I think I've already saved in trading view. It's here, SPX 500, yeah, it's here. So the first time I short here, okay, from 2966, okay, all the way to 2870, and boom, two tucks hit and comes back to the structure, you sell again, now you earn another $60, right? So it's awesome trade. All you need to do is to use my strategies and to box these very beautiful structures for you to earn money. Okay, that's it. All right. S&P. This 2960 is really very good structure for it to take sell. Okay, now it should take some profit because it has already reached the 620 level from here. Okay, almost hit. So for today, for short-term trade, you can take a buy from here from 2896 because this is a structure here. So you want to buy and see whether it can goes to this place here, and maybe it has another fall. Okay, but you can try to have to buy the pullbacks. Okay, and then to resell it, reopen your trade here to sell again. Sterling yen is covered. No, not yet. It's similar to the sterling dollar. The sterling yen, I'm going to ask you guys to watch this 130 level, 130.14. Watch for here to buy the 618, and that will be a good price. Okay, because this will be a very super nice swing trade. 618 pullback, another 600 pips move. Okay, so wait for the come to 130 to 14. Okay. All right, Nick. Yeah, especially for you. Okay, Bitcoin. Okay, Bitcoin is now having a consolidations here. So looks like another bad pattern already occurred. So some buyers from 78 7,000. Okay, 7,800. But you need to see whether you can break this downtrend line first and to buy. If it's still in this triangle, do not buy at the top. Okay, trying to buy from the low. But if it can break up and then pull back, you can buy and aim to 9,600 to this breaking point here. Okay. Now after that, you can take a short from here. So that's a trade for the for the Bitcoin. All right. Okay. So I think I have covered all the markets. And today, yeah, really interesting that we are found out many trade, especially for the oil trade and also for the oil rally. Very nice. Okay, from the 30 minutes. Oh, I think we have already earned some money, right? Good. Yeah, already in the money. That's good. And guys, I really need to ask you guys to sit in the to form this trading mentality that you have to prepare yourself, okay, for profit trading, because you have to understand how the market moves, and you have to know where to identify those buy low and sell high opportunities, and how to identify those profitable patterns. Okay, and use the predetermined correct stop loss and profit taking level. So all these 6 skills is covered in my course, and is available online. So you can just learn my course from the internet, from the YouTube. Okay, so I'm going to tell everything about I know to how to help you to set up your trade and to overcome those short for those weakness of an individual trader, that some people are scared, some people are too greedy, some people are too just too rookie. Yeah, so I encourage all the traders, if you want to making money from this market, all right, I encourage you to learn my course and apply those strategies in the market. Like just like Nicholas, just like Shock, just like Lane, you see, all of them are doing very good job after taking my course. Okay, so you can go to my harmonicasia.com. Okay, go to harmonicasia.com and sign up for a course, and yeah, I'm one of my students members. All right, so that's all for today. Thanks for coming, and we are going to have this last quarter in 2019. So let's wish all of us a great winter season, very profitable trades, a lot of money. Yeah, just like what I see in the WhatsApp group, right? People, yeah, I think Vipo really made a lot of money from gold trade. Yeah, congratulations. Yeah, okay. So that's all for today. Thank you. Bye bye. See you next time.